Let's talk about a home equity line of credit and when you would use that instead of a bridge loan. A home equity line of credit is just a line of credit taken on a house where we are utilizing the equity in the home on top of the first mortgage. So if you have house A and you've got a first mortgage on house A, but you've got lots of equity built up in house A and you would like to use it to buy house B, then you could actually use that as a home equity line of credit to pull the money out of house A and then put it as a down payment for house B. We'd need to make sure that we have the monthly payment included in the debt ratio, et cetera, et cetera. But it is a possibility. But here is one big hangup for most home equity lines of credit. If house A is already listed, then a lot of times you cannot get a home equity line of credit. So it is important that if you are going to consider doing this option, that before you list house A, you go ahead and get your home equity line of credit set up. The beautiful thing about a home equity line of credit is you only pay on what you draw. Think of it as like a credit card against your house. So you only pay on the money that you've pulled out of that home equity line. So you could go ahead and set it up a year, 2 years before it is time to actually use the home equity line of credit to buy. It's nice to have it already set up and ready to utilize. And then when you want to pull it out to buy on the house, you pull it out and then you make the monthly payment on that because you've pulled out the money from that home equity line of credit. But remember, if the home is listed, that's typically a stop for home equity lines of credit. So make sure and ask that question. Now, there is still an option if that is the case, and that is a bridge loan. And there are a couple of different types of bridge loans out there. But if your house is already listed and you've decided you do want to pull the equity out of that house to use to buy the next house, that's when you would go to the bridge loan options, which have a little bit more of a time restraint on them. Whereas a home equity line of credit doesn't have a short term payoff. You can actually keep that for years. The bridge loan typically has a 6 month or a 12-month lifespan. So you need to sell house A faster rather than slower. All right, now if you're a real estate professional and you would like to make this information on your own social media, make your own video, please go check out rechargingwithchampions.com, the members only area. This will be in your November scripts. So you can go grab that script and use the script or just read through it, get the gist, and make your own video. The point is, you should be the guru in your market, making sure that your buyers and your sellers know that this is an option. Go make the video and get some marketing done. We'll see you next time.